talk about what he's making of the market right now. Mayuresh, hi, morning. Great to have you in the show. Mayuresh, some renewed vigor now with the entire auto pack in the run-up to the GST implementation. Do you still see opportunities on board, and do you really think the rate rationalization can really bump up volumes for Motown?
Morning, Aisha. I think if you probably look at a lot of management commentaries post the GST rationalization that has happened, companies like Maruti, companies like a Hyundai India have clearly indicated that where they had forecasted a negative volume growth before the GST rationalization kicked in, they are now looking at a very positive volume growth. So anywhere between 6 to 10% in terms of positive volumes being played out. So I think once this month is largely done with, there is a Shraddh season which is going on. GST rates will also kicking on the 22nd. I think from the coming month, you will see decent amount of demand coming back. And if you go by management hearsay, I think if volumes start picking up in a significant fashion, that does have an implied effect in terms of how numbers will play out. In terms of price action, I think a large part of the price action has got gestated in terms of all the actionables, whether it's expectations of volume growth coming through because of GST cuts, input costs largely stabilizing at this juncture, supporting margins. Largely might be in the price. But as numbers start kicking in, I think the sector will still remain in focus. So I think we continue our holds on stocks like a Hyundai and a Maruti on the four-wheeler pack and a TVS Motor in the two-wheeler pack. However, I think our thesis is auto ancillaries as a space should continue doing well, not just from the OEM players where the volume bump up will definitely start reflecting in their numbers as well, but also in terms of the replacement market where pricing still remains in their favor and where I think a combination of these two factors of demand coming back strongly and pricing remaining in their favor along with margins remaining stable might mean operating leverage actually kicking in. So auto anchs as a space, Aisha, is something that we are looking at this juncture. A few stocks that we like at Markets with India based on our rating, rankings, institutional holding approach that we've got in CanSlim are stocks like an SJS, as an example, where our belief is that the content per vehicle will be significantly higher. Uno Minda is one more stock where I think the expectations in terms of their product mix, the balance sheet strength that they've got, and expecting all the domestic part of the business is almost 90% actually contributing by significantly both for Uno and SGS might actually be triggers for earnings growth going forward. So I think auto anchs is a space where we remain extremely optimistic.
All right, so that's the take coming in on autos, and preference continues to be the auto ancillary space. But with this, let me also welcome Aditya Agrawala on the show. Hi, Aditya, morning. Firstly, help us understand how do you see the markets and also give us your trading ideas for today.
Morning, Shrishti. Thanks for having the show. I think markets are still good to go to levels of 25,400 on the upside. There's a minor hiccup around 25,150, 25,160, which happens to be the previous peak that we had witnessed a few weeks back. But overall, I believe markets are good to cross that and head to levels of 25,400 on the upside. Here, I believe Bank Nifty's finally made a comeback, and this move that we're witnessing on the Bank Nifty should propel the index to levels of 55,500 or 55,800 on the upside. So overall, I think banking, which has been a laggard so far, might take a lead and from here on hit levels of 55,500, 56,000 as well. Give it some time. Now, with that in context, I've got a couple of stocks that do look good, interesting to me. And one is from the banking space, Shrishti, AU Small Finance Bank. That looks quite interesting to me. So AU Bank is a buy at current levels. After a decent bit of a correction, stock is gearing up for a breakout from a downward sloping wedge. So at current levels, I'll be a buyer in the stock for a target of 765 on the upside, with the stop loss on the downside at 680. The second stock is Siemens. Now, this is again one stock which is seeing a good upside potential. And yesterday was a good breakout on good volumes as well from a channel pattern. So for a target of 3,600, I'll be a buyer here, place a stop loss of around 3,150 on the downside.
Okay,
Okay,
so
bunch
those
of
are
stocks which are in focus this morning. There's, of course, a couple of order wins, and NCC, they've bagged a sizable 2,090 crore rupee order from the Bihar Water Resources Department. So that's going to be one buzzing stock to look out for. And then, of course, there's Midhani as well, which has bagged a 136 crore rupee offer, or order rather. So that's the other one which we're going to be keeping on our radar this morning. And then, of course, we were just chatting with Mayuresh about the auto pack. Victoris is priced at 10.5 to 19.98 lakh range. The sales are going to kickstart from September 22nd. That's the new offering from Maruti's stable. They've announced the introductory prices so far, at least. There's, of course, Adani Enterprises too. They've got that LOA for a ropeway project between Sonprayag as well as Kedarnath. It's a sizable investment of about 4,081 crore rupees that's on the table. So that's the other stock which is also going to be in focus this morning. But Kunal, just yesterday we were talking about the defense pack being active and the churn within the defense names, which also we saw at play. Having said that, much of that rally didn't quite last through up until close yesterday. Any fresh positions you recommend taking?
I strongly believe, Aisha, that this is a big turnaround for the defense pack, because you've seen stocks falling up 30-40%. Now, whether you look at the traditional large cap names, Bharat Electronics, BEL, I think that stock corrected from 440 or 430, 440 levels to almost 360, 370 thereabouts. It's a sizable 20% correction, even for the large caps. Now, when you look at this in the context of Bharat Dynamics, Mazgaon Dog, GRSC, etc. Many of these stocks have corrected more than 40% also in the last 6 months or so, 1 year or so. So I think in that context, what we are looking out for is a major uptrend for many of the defense pack. Yes, in the last 3-4 days, the momentum has come back again. The price action has improved significantly for these stocks in a very shorter period of time. But I believe that there should be a case where many of these defense stocks would get into a second leg of uptrend. I'll give you an example. What happened to the railway stocks, for example, RVNL, etc. Almost a week, 10 days back, these stocks start to show first couple of days of very strong price volume action. Then what followed was almost 1 week of listless price action. These stocks were trading into a range where the volumes had dropped down, the price activity had narrowed. For these names, and then suddenly over the next couple of days, you saw these stocks moving up higher by a margin of 10% plus. So which means that we are looking at a very reciprocal kind of a price action for many sectors. Same, I believe, could probably happen to many of the defense names. So in case if these stocks consolidate, say over the next 1 week or so, or go into a very mild correction like 2, 3, 4, 5%, then I think that's a good dip to chip into.
Okay, so that's the take coming in on some of those stocks. But Mayuresh, want to get your sense on the entire diagnostics pack. Now, this is a space that we haven't spoken about in quite some time. And today we have news flow coming in on Thyrocare, wherein their holder API is expected to, do an NCD issue for 1,700 crores, and that could lead to a creation of up to 61% stake in share pledge. So while that is news coming in on Thyrocare, what is your take on that and the overall diagnostic space?
So I think a long way to go. Honestly, I think the organized players have a decent market size to probably capture from the unorganized players. And obviously, I think with expectations of more specialized tests being conducted by a whole host of diagnostic players, including the diagnostic players attached with hospital chains, you're probably looking at this industry which should grow at a decent pace. Having said that, I think if you leave aside the diagnostic change attached with the hospitals, the standalone diagnostic change with a nationwide presence should continue doing well, in my opinion. Again, I think Dr. Lal is an example as a healthy cash balance. They're trying to expand to the rest of the country. A large part of their presence has largely been attached and attributed to the north of India. However, I think Krishna Diagnostics is a very interesting name within this space again. Our own sense is that the kind of openings that they've probably done in terms of their labs, the ROCs obviously remain subdued. But as these labs achieve maturity over the next 12 to 18 months, the kind of incremental additions that happen to the additional ROCs that these labs can probably start contributing can be significant. Second, I think in terms of the broader aspects of their tests and the affordability of tests that Krishna can probably provide and does provide, I think a large part of the volume growth that will come through in terms of the pricing that they've probably got should be relatively better. So I think if you combine both these aspects put together, along with expectations of expanding their operations like the rest of the players are also doing, in a very calibrated manner without having too much of leverage built on the balance sheet. My own sense is that Krishna can actually be a dark horse as far as the diagnostic space is concerned.
Right, that's Krishna Diagnostic. In the last 1 month itself, it scaled up about almost 5.5% or so. Let's check in on some of the other names which are also going to be movers today. We were chatting about Bajaj Finserv. In fact, this was one of Kunal's stock idea yesterday itself. Bajaj Allianz General Insurance has now won that 374 crore rupee dispute against the Maharashtra government. So that's one stock, of course, which is in focus. The entire NBFC cluster of late has been doing quite well in any case. So not just Bajaj Finserv, Finance, but Chola, Shriram, these are all stocks which have been in focus. But Kunal, would you still go with Bajaj Finserv as your top pick within NBFCs?
I think it's one of the picks, Aisha, because Bajaj Finance is the most strongest one. Bajaj Finserv was underperforming. So even if you look at a price comparison, Bajaj Finance is up, I think, 5% from its previous highs. Bajaj Finserv is still down, I think, a couple of percentage points from its previous highs. So even if you look at say, a catch-up rally over here, Bajaj Finserv has a room of, moving up higher by at least 3 to 5 percentage points before it catches up with Bajaj Finance. And then, we look at the other peers. We're discussing L&T Finance also. I think that stock has also done reasonably well, and there's been a complete change of beta, the price trend for the stock. The moment the stock had managed to break past about 170-75 mark, that's another name to look out for, specifically from a medium to longer term play. AB Capital is something which I've been highlighting over the last many years. That stock also looks attractive at current levels. You have new stocks emerging from the entire NBFC stroke HFC pocket, and that's Shriram Finance, the stock which has been an underperformer. I think a breakout that 610 mark for Shriram Finance has been a good breakout on the short-term basis, and I think it's also confirming a breakout of a 200 moving average. So, lot many options open up, especially with the larger cap peers like Bajaj Finance, Finserv breaking out.
All right, so that's the take coming in on NBFCs. But Aditya, wanted to have your take on Adani Enterprises as well, because in the latest, we get to understand that the company has received a LOA for Ropeway project to invest over 4,000 crores. And along with that, it's the whole data center theme that is once again gathering steam. We did see some of these counters buzzing away, but one of the brokerages do believe that it's going to be the large companies from the likes of Adani and Reliance which could be beneficiaries. But specifically on Adani Enterprise, how do you see the technical setup?
Actually, it's more of a consolidation that we're witnessing in the stock. Matter of time before it breaks out of that hurdle of 2420, which has been acting as a minor resistance on the upside, offers an excellent risk to reward. So without a doubt, I would look to buy the stock at current levels and hold on to it at least for a couple of quarters with a stop loss on the downside somewhere around 2200. On the upside, stock can easily test levels of 2600 and then maybe 2900 as well. So 2600, 2900, these are two targets I'll play with and hold on to the stock. Maybe place if you're looking for a deeper, longer target, then maybe place a stop loss at 2200. Otherwise, an immediate term stop loss could be somewhere around 2300 on the downside. But overall, the chart structure is suggesting that matter of time before it breaks out of that hurdle and you will see a decent bump up in the stock. So not a bad stock to add in the portfolio, not a trading bet just yet, but yes, buy and hold in your portfolio.
Anytime you think there cannot be more innovation in the existing quick food delivery, quick commerce space, it surprises us with more coming. And exactly that is what Swiggy has done. Because remember, earlier they had spoken about a strategy of keeping all their brands under one Swiggy umbrella and keeping them on the same platform. And this diversifies away from that because there is a new toying platform that will not be under the same umbrella of the Swiggy app. So, Antli, thanks for all of those details. But Mayuresh, what is your take on these new launches coming in, new innovation? We've seen back-to-back hike in platform fees coming in for both of these listed quick commerce and quick food delivery majors. What is your take on competition when it comes to this entire space? Because just this morning, we've had a note coming in from Elara, wherein the note says that Rapido's only is seeing teething issues in ordering. So early launch, new player, but not being able to see the offtake that the earlier two listed players have had. What's your take on this entire setup of competition that we're seeing in the quick commerce space?
I think they're tempting us to even order more, right? So I think that's the whole take that is probably expected to take place in the landscape. But coming back in terms of how competition intensity will play out, I think it's the player with a better back end support and better infrastructure that will probably succeed at the end. because with prices being extremely competitive and more apps being launched, city-wise, and again, I think region-wise, you probably got to understand that the demographics of India are quite different. So I think I still remember an article that HUL had carried years back. They said many Indias in India, and therefore I think these food delivery aggregators will innovate, will keep on innovating as time passes. And that is the right strategy going forward. How does that impact volumes? The expectation largely is that volume should pick up, as I just mentioned. I think the habits are gradually and positively changing for not just urban India, I think even semi-urban India. And therefore, I think these food delivery apps, aggregators, in terms of volumes, might continue doing well. Obviously, I think the dark store expansion that both Zomato and Swiggy have been very aggressively following over the last few quarters should conclude at some point of time in the next couple of quarters. And therefore, I think from a volume and a growth perspective, I think numbers will still keep on flowing in. The dynamics in terms of EBITDA and bottom line should also positively change with better volumes coming through. However, I think the only issue that I've got is prices have moved a tad bit too much. Valuations are way too expensive.
Although reports seem to be indicating that Process is eyeing a big bite of Swiggy's Rapido stake, and it seems that they're eyeing, a piece of Swiggy's Rapido, that is. Other than that, of course, a lot of brokerages talking about where their preference on a few stocks. And Citi has come out with a note on Reliance. They've put a buy, they've put a target price of about 1690, and they're saying that the holding company discount concerns have been dispelled as SEBI has finalized the new listing norms now, which are going to pave way for the listing of Reliance Jio. They're saying that the proposed changes to listing requirements by SEBI reinforces the two key positives that they had previously highlighted, which is removes a key liquidity overhang for Jio's potential IPO and largely dispels the holdco discount concerns post-listing of Jio, given the low float in the stock. Also, they are eyeing or valuing Jio Platforms at an EV of about $135 billion via the SOTP valuation method, and they are expecting the planned listing of Jio in the first half of the calendar year 26, which is going to lead to a meaningful value unlocking for Reliance, according to them. But Aditya, what's been your reading on the charts of Reliance? Because each time there's some positive news flow, as was on the sidelines of the AGM, one thought that the stock is going to pick up, but it continues to be subdued.
Absolutely, Aisha. In fact, it's one of the stocks which is testing the investors' patience to the T. And apart from HDFC Bank, Reliance is another stock which is just not going up anywhere. But my sense is one can't ignore the stock as well. It's one of the largest stocks part of Nifty 50. And after this correction that we're witnessing, my sense is it's a good time to add the stock in your portfolio. On the downside, I think 1300, 1320 is a good support area. And you will see eventually levels of 1600 in the stock. Give it some time, maybe a couple of quarters, and you will see 1600 kind of levels. And once that is taken out, you will see another leg of rally in Reliance, because then it enters into an uncharted territory as well. So overall, from a risk to reward perspective, from the fact that a lot of time correction has already happened in the stock, definitely I would bet my money on Reliance at current levels. With a stop loss just around 1350, 1300 on the downside, I will look for a target of 1500 to 1600 eventually, and then first targets, and then eventually look for a target of beyond 1600 post couple of quarters.
All right, so that's the day coming in on Reliance. But Mayuresh, one of the other pack that was buzzing yesterday was actually the power financiers. After a while, we have seen stocks like PFC and REC moving. And in the latest, there has been a block deal in PFC of over 11 lakh shares. But help us with your view. How do you see the power financiers at this point in time? They haven't participated much of late, but do you find the valuations comforting?
Morning, Shrishti. Again, I think as a space over the next 10 years, the kind of capex that will be required in terms of all the projects that the central government is probably planning when it comes to renewables as a space, taking the capacity to 500 odd gigawatts, you're going to need massive investments expected to come through. And a large part of those projects will be either central or central and state sponsored. And therefore, I think state financiers like a PFC and REC will play a key and a pivotal role in terms of ensuring that this financing is well met. Having said that, I think the expectations in terms of asset quality issues should largely not be drawn onto the balance sheets, because a large part of this funding or financing will be towards central stroke state sponsored projects. The third element obviously is the kind of balance sheet strength that both these companies have now over the last few quarters. And obviously, I think the last 2 quarters, there was a little bit of an execution miss that probably played out both in terms of numbers as well as price. But I think the longer term picture is probably very robust, and they will play a key and a pivotal role. Obviously, let's not forget the dividend yield that both these stocks have drawn. So yeah, I think remain positive on Power Financial as a space.
Okay, so positive outlook coming in on Power Financials from Mayuresh. Mayuresh, thanks so much for your time. Appreciate your view and you joining us this morning.